How's it, guys? Welcome back to the channel and thank you for tuning in. So, this is part two of the how to trade the silver bullet video that I made yesterday. So, before we begin, let's quickly go over the rules of the silver bullet model, the ICT silver bullet model. First rule, you wait for a fair value gap to form between 10 a.m. and 11 a.m. New York time. Uh, I will show you how to set your time zone to New York so that you can easily reference the times. Rule number two, you identify the next draw on liquidity. In other words, you identify where price is trading to next, where price is going. You try to figure out where price is likely to go higher or lower, right? If so, where is it going to? If it's going higher, it's obviously trading to a premium. So you look for premium discount arrays as your draw on liquidity. Number three, you enter at the fair value gap to get in sync with price. So after price forms the fair value gap and you've identified the draw on liquidity, you enter at the fair value gap to get in sync with price. Okay, previously I ended on the 15th of September. So now I'm gonna continue from the 14th. So on this trading day, the 14th of September, we see price creating a fair value gap. But what kind of a fair value gap? An inversion fair value gap. So it's the opposite of a fair value gap. So we see price creating the fair value gap immediately at 10.01, trading lower. We see another inversion fair value gap in this case. So it trades through it the first time and then it goes back and then finds resistance. So this is real support and resistance. So this is nothing you've never seen before. It's real support and resistance. As you can see, the bond closing in the lower quadrant of this inversion fair value gap. So this is not a fair value gap, it's an inversion fair value gap. For this model, we want to trade the fair value gap, not the inversion fair value gap. So we see price trading lower, finding resistance at this inversion fair value gap, then breaking lower. Where is the draw on liquidity at this moment in price? We're going to the new day opening gap, consequent encouragement. So the difference between yesterday's closing price and today's opening price, all the difference, the midpoint, in other words, the halfway, the consequent encouragement of that is this level here. This is our discount premium array. So when the market was trading up here, it was in a premium, and then it was going to a discount where it found support. After trading to a discount, now it may what? Go to a premium. Where does it go? It goes back to this inversion fair value gap and then forms a swing high. So this is advanced, guys. I just quickly switched up on you. This is normal basic. This is advanced. But if you try pay attention, you might get onto something here. So it creates the swing high and then it goes back to the new day opening gap consequent encouragement where it again finds support. Look at the bodies telling you the story. The bodies are closing above, meaning price is in a buy program. Price it wants to go high. We have a swing high here, a short-term high. Price trades aggressively above this short-term high. So what is that? That's a market structure shift, meaning that's a shift in market structure. Price was delivering lower prices. Now it is delivering higher prices. That's confirming the buy program. So I was able to see the buy program from here. If I was in the live environment, I would see the buy program from here. But once it does this, it confirms the buy program. It again finds resistance one more time at this inversion fair value gap here. So we remember the silver bullet rules. We wait for a fair value gap to form between 10 a.m. and 11 a.m. This was an inversion fair value gap. That's the only fair value gap. That's the only imbalance that was left. It was a CB inversion fair value gap. What makes this inversion fair value gap? Price had to go to a discount. So it's narrative. You have to know narrative basically. But in other words, that's not the fair value gap you're looking for. The fair value gap you're looking for is this one. Here, the second one is this one. So which one do you trade? Rather trade the first one, but you have to put your risk. So this is a different, okay, no, I'm teaching you that, no. Okay, I'm being too advanced on you guys. I'm teaching you a different model, which is outside the scope of this video. So for the silver bullet, guys, you look for a fair value gap in between 10 a.m. and 11 a.m. Here's a fair value gap. Trade the first fair value gap you see. Remember what I said the last time? You can either enter as soon as price enters the fair value gap, or if you want to refine your entry, you could pair it with this order block. So that line there could also be an entry. Or you can use, remember what I said about consequent encouragement? You can use the midpoint of that. So the 50% level. Let me just quickly remove this. So this is the line I just put now. This black one. So you can use this as an entry as well. And look at that. Look how, well, you can see how much of a sniper that is. You can use the midpoint, the consequent encouragement of the fair value gap that you saw that was formed in between 10 a.m. and 11 a.m. So after you entered the fair value gap, price trades higher. Inversion fair value gap, it trades through it, and then it finds support. It finds support at the inversion fair value gap, and then breaks higher, comes back, finds support one more time. I call this a kiss. So when it comes back, it kisses it one more time, kiss goodbye. When it comes back, it kisses it goodbye, and then it goes. So which it means it was like honoring that this inversion fair value gap was there in price, and then it uses it as support and resistance basically. Where is it going? Number 2, you have to identify the next draw on liquidity. In other words, where is it going? So in this price action, you can see this relatively equal highs here. These are relatively equal highs, well, at the time in price. Relatively equal highs. You put them in the center. In other words, this is buy side liquidity. Buy side liquidity. So there's buy stops. This looks like a double top. You can see it looks like a double top. So you're trading against that. When you say double top, that's your enemy. That's juice for you. That's like the sweetest entry you can take. Trading against the double top, buying a double top, or selling a double bottom. We call those juicy trades. Basic smart money trade. So there's buy stops above here. So as price creates the fair value gap for you, it's telling you that it quickly wants to hurry up and take out these buy stops. So when it creates the fair value gap, smart money will see that, and then they will enter at the fair value gap. So there's different. Smart money refers to a lot of people that are trading the way I'm teaching you right now. There's a different personalities to those guys. It's different guys, different organizations, and at the end of the day, different people. So some of them will enter the opening price of this order block, like I showed you. At the opening price of the order block, as soon as it taps it there, they'll enter there. Others will enter the consequent encouragement. Others, they'll enter as soon as it enters the fair value gap. So it is personalities, different personalities. Others will enter as soon as it comes back and finds support here. But they'll be trading different ways. But at the end of the day, you're all doing the same thing. So guys, what I'm teaching here, I'm teaching you how to like know what smart money is doing and then also do it. Meaning you're also smart money at the time. Now, well, from today, basically. If you take this serious. So we create the fair value gap, trade with price higher, second fair value gap. What time is it? 22:11. So you're still in the silver bullet hour. Second fair value gap, you could also trade that as soon as it enters there, or you could trade the midpoint of it. As you can see, in this case, it fills it completely. Why? Because it has to kiss and goodbye this order block. The what is it called? The high of this order block. So as you can see, look at this. On my top on my top left side of the screen, there's open, high, low, and close prices. Look at the high of the order of this candle here. The high is 4540.25. The low of this candle here, so you're looking at the L price, is 4540.25. That is it's beautiful price delivery. It's perfect price delivery. It means the algorithm for this day, well, in this point of time, delivered perfect price delivery, basically. So if you saw the fair value gap entered there, that's your fair value gap for the silver bullet. It continues to go higher. Second fair value gap. Well, no, third fair value gap. So you're looking at fair value gaps between 10 a.m. and 11 a.m. to get in sync with price. So here is the third fair value gap. In this case, it just comes and it partially enters. So if you wait for the Queen's Code encouragement, you would have missed the entry. But those who entered, as soon as it enters the fair value gap, they would have got their fill for this fair value gap in price. And then it continues to price higher, continues to go higher, 11 o'clock. Even 11 o'clock, that's where I'd close. If I was trading this, if I had entered here, the 11 o'clock I'd close. Why? Because relatively quite highs, we've taken them out. Buy side liquidity above this, we've taken it out. The midpoint of this week, as you can see, this week, this long week, that's a gap in price. Halfway of it is also a target. So you could have targeting that as well. So at 11 o'clock, all my target would have been met. There is no reason for me to hold this anymore. So here you can close the trade. Like I said, 11 o'clock. If you don't know where the market is going or if your targets have been met, you close the trade. And then you basically don't care what price does afterwards. Or obviously, if you had like entered multiple trades, you could like leave one, and then obviously it would have went in your direction. So guys, I feel like I don't need to continue any further for the sake of content creation for this model. So I'm gonna cut this one short and then record different models. Thank you for watching. If you like this, please like and subscribe. Thank you.